more than just business news, we're news for business people.
Good morning and welcome to Bloomberg Quint Live. This is India's first digital live streaming business news service. You're watching DayBreak with me, Alex Matthew. Let's first look at the headlines. Asian shares decline in morning trade after Wall Street slips on reports China may reduce or stop its treasury purchases. The SEBI has imposed a 2-year ban on audit firm Price Waterhouse for its role in the Satyam scam. The earnings season starts in earnest with the first two Nifty companies, TCS and IndusInd Bank, reporting their third quarter earnings today. And UIDAI moves to address privacy concerns about the Aadhaar, introduces virtual ID to avoid the need for sharing the Aadhaar number at the time of authentication, and a limited KYC feature that will remove the need to store Aadhaar numbers by agencies. Let's head to the international markets now. And US markets closed lower for the first time in 2018 as investors fretted over China's plans to halt its treasury bond purchases and the possibility of the US pulling out of NAFTA. The S&P 500 and Nasdaq snapped a 6-day winning streak. Bloomberg's Abigail Doolittle has all the updates in this report.
Wednesday's Wall Street session brought about a first for 2018. Declines for the major averages. The Dow, S&P 500, and the Nasdaq fell on the session. But before you get all that worried about it, the declines, the losses on the close, really very small, even fractional. Now, this pullback, small pullback, tiny pullback, could actually just reflect the fact that we've had so much strength, 6 up days in a row, record highs up until Wednesday. So investors on pause, especially before earnings season gets underway. Now, a source of agitation, though, for stock investors. It'll be interesting to see whether it continues. Bonds sold off for a 5th day in a row, rates rising to levels last seen in 2014. That is for the 10-year yield. This is China said to be wary of Treasury. So stock investors not necessarily liking that surprise and what it could mean for stocks over the long term. Now, those rates rising did certainly have an influence on sector composition. Most of the sectors in the S&P 500 lower. On bottom, the rate-sensitive sectors, including utilities, telecom, and real estate. The dividends for those sectors high, but they look less attractive when rates rise. Now, relative to tech, that was one of the down sectors, modestly down. Down more, though, the chip sector, the stocks down 1.2%, down for a second day in a row. Its worst 2-day slide since December of last year, early December of last year. And that was really a area of underperformance. And then finally, when we go cross asset class, bonds may have sold off, but the Japanese yen traded higher, up more than 1%, its best day since May of last year. So overall, Wednesday's Wall Street session certainly had a risk-off undertone. In New York, Abigail Doolittle, Bloomberg News.
Now, before we head to the Asian markets, let's actually look at one of the big updates that came overnight. That's 9 years after the Satyam scam came to light. SEBI has found the company's audit firm Price Waterhouse guilty of abdication of duty and involvement in the fraud. PW network firms have been barred by the regulator from issuing certificates of audit for listed companies for 2 years. PW partners Srinivas Talluri and S. Gopalakrishnan have been barred for 3 years. The two partners and Price Waterhouse, Bangalore, have also been ordered to disgorge wrongful gains of over 13 crore rupees with interest calculated at the rate of 12% per annum from the 7th of January 2009 till the date of payment. For more on this unprecedented action by SEBI, I'm joined by Menaka Doshi. Menaka, 9 years it's taken.
Well, it has, and at the end of 9 years, and the order explains why it's taken so long, because there are several parallel investigations going on, including criminal investigations. We have an unprecedented order, Alex, as you've pointed out, one that, for the first time, at least in my memory, has SEBI, the Markets and Securities Regulator, barring an audit firm from being able to issue audit certificates for a 2-year period. And it isn't just any one firm of the Price Waterhouse network. All the firms that share the brand of Price Waterhouse have been barred from doing so. So therefore, this is unprecedented. We have never seen SEBI take action like this before. But then again, the Satyam scam was an unprecedented one as well. Now, let me give you some details of on what grounds SEBI decided to do this. So there were 5 charges, if I may call them that, on the basis of which SEBI examined the actions and the behavior of Price Waterhouse and the partners that you've mentioned. For instance, the first one had to do with non-existent cash and bank balances of a little over 5,000 crore rupees. And in this, SEBI has gone to great detail to show that no external confirmations were sought in order to verify these cash and bank balances. And in fact, in several instances, SEBI has also depicted in its order that, there were differing balances available based on what the banks told the auditor and based on the information that the company offered the auditor, and yet the auditor was not alarmed enough to investigate or verify this independently. So as you can see, the quote we put up from the order on the screen says that the auditors ignored the first set of confirmations received directly from the banks, relied exclusively on those received from the company, showing deposit balances which were tallying with what was shown in the books. The second charge had to do with inflated sales revenues using a little over 7,500 fake invoices. Here again, SEBI has found that Price Waterhouse, the firms involved in the audit, as well as the partners, failed to do enough verification. So they failed to walk through tests in respect of the invoices. They did not take all the internal control measures that were required. They chose to ignore internal audit reports. They relied on ledger entries, and they did not conduct the audit as maintained or mandated by accounting standards and the guidance note that accompanies that. On the third charge, or the third ground, it has to do with overstated debtors position by hundreds of crore of rupees. SEBI again found that Price Waterhouse did not do adequate external confirmation of debtor balances, which in turn resulted in it failing to notice the inflated and false figures concerning Satyam. SCSL in the graphic plate refers to Satyam Computer Services. There were 2 other charges. One had to do with a variance in the TDS benefits that were claimed and that were shown in the books. In that, SEBI said that, it was not fully convinced that, the TDS variance was easily identifiable by the auditors. And therefore, they have said that I would, of the view that the charge contained in the show cause notice, SSCN is that, against the notices concerning TDS is not sustainable. And similarly, in the 5th charge, which had to do with failure to detect receipts of about 1,400 crore rupees, SEBI did not find enough ground to be able to maintain the charge. Now, these were the 5 specific grounds on the basis of which SEBI investigated the behavior of PW or its work as the auditor of Satyam. And in summary, this is what SEBI has found. Gaping holes in the auditing process followed by the auditors. The attitude of professional skepticism was missing. That, in fact, they also ignored a whistleblower letter that was received by an independent director on December 23rd of 2008, just a few days before Ramalinga Raju, in fact, confessed to his crimes. And they said that, the independent director had asked the auditor to investigate this whistleblower's letter, but no action was taken. Thereafter, SEBI says there has been total abdication by the auditors of their duty to follow the minimum standards of diligence and care expected from a statutory auditor. And it goes on to say that therefore it has come to a satisfactory conclusion as to the culpability of the auditors. And it is stated that mens rea in the criminal sense of the term is not relevant to be established in a violation alleged under SEBI, read with the applicable provisions. The reason I'm quoting mens rea here is because in their argument and in their defense, SEBI and the 2 individual partners had argued that there was not enough evidence to show that there was actual specific involvement on their part. And so therefore, SEBI has argued that I don't need to show specific instances of mens rea, that in fact this all-round abdication of duty is enough for me to find that you were possibly involved in the fraud. And that's on the basis of which SEBI has taken the action that it has. Alex?
Menaka, you mentioned right at the start that this is unprecedented because of the fact that the Satyam audit was tasked to 2 member firms and 2 partners. So, but the entire network firms have been punished in this manner. But is there any rationale as to why that has happened?
Yes, I think SEBI has again gone to great lengths to establish how the Price Waterhouse network functions, how they have common resource agreements, and how all these network firms in India are linked to each other. They've also pointed out in their order that the Satyam engagement letter in appointing the auditors is signed only as Price Waterhouse and not by a specific firm in either Calcutta or Bangalore. Those were the two specific firms, in fact, that were involved in the audit of Satyam. But they have not curtailed the action only against those two firms and those two specific partners. They've taken action against all of the Price Waterhouse network firms on the basis that these are all linked to each other. They've also noted the action that SEC and the PCAOB, the super regulator, audit regulator in the U.S., took against Price Waterhouse. And they've said that SEC and PCAOB also note systemic problems in the audit processes carried out by Price Waterhouse entities, and therefore it's difficult not to take note of the loss of faith of investors in the brand name itself, which is why SEBI felt compelled to take action against the entire network of firms and not just two specific firms or two specific partners. The Price Waterhouse entity of firms, a group of firms, had argued vehemently, as the order points out, that there was no reason to punish other audit members and other chartered accountants employed by their firms, because of the potential failings of two, even though they've argued that nobody has failed or there was no culpability or involvement. But SEBI has not bought into that and therefore has taken action against the entire network of firms. And as you pointed out right in your introduction, the entire network of firms, all the firms sharing the Price Waterhouse brand name, now stand barred from being able to issue an audit certificate or a compliance certificate to any listed company or intermediary for the period of the next 2 years. Equally important is the disgorgement order. The disgorgement is of about 13 crore rupees right now, specifically to be paid by Price Waterhouse Bangalore and the two partners involved. But it's not just 13 crores because, as you pointed out, it's to be paid at the rate of 12% interest right from 2009 onwards. So that works out a sizable amount. I'm sorry, my mental math is not very good early this morning, but I'm sure someone who does the calculation can figure out that this is a fairly large amount that they've asked for disgorgement, and this is based on the fees that were paid for that specific audit service.
Well, Menaka, we'll work on our mental math, and by the time we have Indian Open, I'm sure there's lots more on this topic that will be discussed, and also the implications of the move. But thanks so much for putting all of those things in perspective for us this early in the morning. Price Waterhouse, for its part, has issued a statement after the SEBI's move, and I want to quote that. They've said, "We are disappointed with the findings of the SEBI investigations and the adjudication order. We believe that the order is also not in line with the directions of the Honorable Bombay High Court Order of 2010, and so we are confident of getting a stay before this order becomes effective." Fairly confident statement there by Price Waterhouse. But let's move on to the Asian markets now, and all three early risers had started the session firmly in the red, with the Nikkei losing as much as 0.4% in early trade. But for more on those markets, let's head across to Rosalind Chin from Bloomberg News. Morning, Rosalind. So sorry for keeping you waiting. There was a big news update that we had to talk about here.
Well, earlier I did hear you talking about moves in the yen strengthening to a 6-week high, and that is having an impact on Japanese stocks. There is, lingering uncertainty about U.S. trade relations, NAFTA, and all of that is fueling that strength in the yen. So that is not helping the equity markets though. So Nikkei down by 0.4% and the Topix down by a similar amount this morning. In South Korea, we see the won also gaining for the first time in 5 days, and that's of course amid this weakness in the US dollar. Right now the won at 1069.90 to the greenback. And we see the Kospi falling as well. That is down about 1/5 of 1%, dragged down by Samsung. Samsung down by about 1/2 of 1% this morning, investors still reacting to its earnings miss from a couple of days ago. Now, Hong Kong, that has started off pretty much flat right now, but it has had 12 straight days of gains. We shall see how long it can continue to keep that rally going. The RSI does show that we are in slightly overbought territory right now, so that a question mark remains on that market being able to sustain its gains so far this year. Now, moving quickly to Taiwan, Hon Hai, one of the big companies there. This is the company that makes Apple products. This showed that December sales rose more than 50% due to strong cell phone business expansion year on year. And Hon Hai is now gaining more than 0.75% in Taiwan. The TAIEX, though, is actually losing about 0.3% this hour. And finally, Australia, stocks falling for a second day there. Financials really dragging on the index today. That's despite some strong retail sales figures. In fact, retail sales figures for the month of November coming in 3 times what economists estimated. They estimated 0.4% rise, and they came in at 1.2% rise. And Apple showing its hand again. The Australian Bureau of Statistics showing that the increase was led by sales in electronics, and that was partly due to the release of the iPhone 10. Driving those sales. So we shall have to see whether that particular spike in household spending and retail sales can be sustained into the future for Australia.
Well, thanks so much for that, Rosalind. Let's move on to the Indian market now. And Darshan Mehta and Agam Vakil, as usual, are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, it's going to be a busy day today, and it's an important one. The Nifty companies are kicking off with earnings.
Yeah, 2 of them, IndusInd Bank and TCS, and a lot of mid-caps also like Shree Cement, Syntex, 5paisa. So a lot of companies will come out with numbers. But the start seems to be on a muted note because the SGX Nifty is indicating a slight negative start. So it's indicating a muted start, but commodities as a pack is doing well. Now, let's take a look at how the ADRs are panning out, and most of them were down in trade. ICICI, Tata Motors, Vedanta and HDFC Bank, they were all down in trade. What gained was the IT pack because the traction was clearly there in our IT stocks. So Infosys and Wipro did well in trade, and clearly you will have to watch out because of the TCS numbers. Now, as far as crude is concerned, it opened muted after 3 days of rally. It rallied over 1% in overnight trade. The WTI hits a high of 63.67. Brent hits a high of coming as close as to $70 per barrel. So there is real traction that's happening, and oil is holding near the 3-year high as the US stockpiles are shrinking every day. So that's the traction that's coming in as far as crude is concerned. Now, if you're looking at the commodity pack, the close on the LME was extremely strong. Most of the base metals did extremely well. They actually moved up significantly. So you can see aluminium was up almost 1.3%. You had nickel, which was up another 2%. Most of them trade, in fact, all the base metals traded with a positive bias. Zinc was the only one that was flat, but you can see across the street, aluminium, copper, zinc, nickel, lead and tin, all of them gaining. Even COMEX copper is trading with a positive bias currently. If you look at the trade data that's coming in from China currently, it's strong chart for the commodities in China. Most of them have done well. Steel, aluminium, copper, all of them are doing well. They have actually inched up even higher than these levels. Rubber has actually started again in the positive. It was trading flat a while ago. Gold is trading with gains for the second session, so there is traction that's happening on the gold side. Now, as far as flows are concerned, FIs were net sellers, DIs were net buyers, but on a month-to-date basis, you could see that FIs were net buyers and DIs have slipped into the negative. They are into the negative territory, 60 crores, and that has moved up because of the 600 crore buying that we saw. Now, overall on the Nifty side, sectoral performance, Nifty IT and Nifty Metal are the 2 sectors which did extremely well. Nifty IT, PSU Bank. So what we've seen is that, in the 8 sessions that have happened, PSU banks have actually closed negative in the 7 out of the 8, and metals have closed in the positive in the 7 out of the 8. So metal has been the strongest, PSU banks have been the weakest. Nifty was down just 4 points, and as usual, the top 4 contributors are the IT companies because there is enough traction ahead of the TCS numbers that will come out today and Infosys that will come out tomorrow. And what didn't do well, SBI and L&T. So banks as well as banks were the main cause of worry in trade yesterday. But Agam, what are we sensing, and any view on the IT stocks?
Definitely, Darshan, we are expecting a lot of, volatility, if I can say that, in terms of IT stocks. But what is also going to drive the Nifty is going to be the IT sector to a certain extent. So let me start off with how we've seen futures pan out yesterday. And do remember that yesterday, in the last couple of hours of trade, we saw TCS move up quite substantially, giving a little bit of a boost to the Nifty. So Nifty closed flat, but it did see another 3.5% addition in open interest. And when it comes to the Nifty Bank futures, again, we're looking at a decline of around 8.5%. So a little bit of unwinding coming in there. Let's also bring out the India Volatility Index. And as you can see, inching up higher, now about 14, but it's largely within the range of 13.5 and 14.5. That's how it's been over the past few sessions. The Nifty put call ratio, of course, edges up. Well, it's largely around the same level, so around 1.65 currently. And moving in terms of the changes in open interest, we are seeing more and more writing the third consecutive day, where we've seen a little more writing the 10,500 and the 10,600 puts, which means that the support is very much in place around 10,500, 10,600. However, there is also writing now showing up at 10,700. So perhaps this indicates a range-bound trade, at least in today's day of trade, before we start getting the big numbers in. That said, in terms of changes in the F&O band, we have Jet Airways and Reliance Power moving in, and of course several other counters that we're keeping an eye on. So we have JSPL moving out of the F&O band. We're also watching out for NIT Technologies, which has gained around 39% towards fresh longs, and we're also watching out for Page Industries, which has seen fresh shorts building in. So a lot of counters there to keep an eye on, but of course all eyes will be on the Nifty and what the earnings do for the movement of the Nifty today, Alex.
Absolutely, and we'll get back to that in just a short while. But before we do that, let's take a check on the rupee and the bond market. Saloni Dhanuka joins us to do just that. Saloni, the bond market's been in focus of late, not just in India, but all over the world.
Absolutely, Agam. Talking about Indian bond market, sovereign bonds declined for the third straight session yesterday on the concerns of surging oil prices and higher US yields, while the yield on 10-year benchmark bond ended 7 basis points higher at 7.44%, its highest close since the security was issued back in May 2017, while the yield on new benchmark security rose 10 basis points to 7.26%. Well, talking about Indian rupee, it snapped its two-day losing streak yesterday and ended 12 paise higher at 63.60 levels against the dollar. It was a highly volatile day as the forex market sentiments turned negative initially on the back of strengthening dollar and rising crude oil prices. However, a record rally in local equities on the hope of more foreign inflows largely supported the rupee's big move. Traders do remain cautious ahead of the release of industrial production and consumer inflation data, which is scheduled for tomorrow. On the global front, Asian currencies were trading higher as dollar weakened after Bloomberg reported that China is ready to halt or slow its US Treasury purchases, thereby fueling expectations that the world's largest foreign exchange reserve holder may shift to other emerging market currencies. Now, coming back home, dollar rupee is trading weaker at 63.77 levels against the dollar in the non-deliverable forward market, which indicates a negative opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. And very shortly, we'll be talking about the two big Nifty companies announcing their results. But before we do that, let's take a check of the commodity market. And Jayesh Khilani has all the updates there. Jayesh, morning.
Morning, Alex. So oil has actually continued its rally upwards after a 2% up move day before yesterday. Overnight, we saw another 1% come about for oil prices, and it actually WTI actually closed above the 63 per barrel mark. Now, you know, this is on the back of positive inventory data that we've got. So EIA has reported that inventories have declined as much as 5 million barrels for last week. That's the positive coming along, and this is the largest draw that we've seen since the year 2014. And based on this, now Citi has revised their target price upwards on oil to 80 per barrel. As far as Indian base metals are concerned, we saw the LME base metal index close up about 0.8%. As far as individual base metals are concerned, nickel, which was the best performer, surged as much as 2% and reached the highest level since 2015. Aluminium posted its first gain in about 3 days and ended up about 1.5%. and we also had copper, lead and tin, which also advanced on the LME, while zinc closed flat. That was the only commodity or the base metal which was actually flat in trade. And if we have a look at the Shanghai Futures Exchange, most of these base metals have started trading on a positive note. Gold, on the other hand, has climbed to a 3-month high on the view that Chinese officials will halt or actually recommend slowing down of buying US Treasury purchases, which has actually put pressure on the dollar, and looks good for gold for the moment.
Thanks so much for that, Jayesh. Let's move on to the earnings now. Technology giant TCS will report third quarter earnings today. It's likely to be another quiet quarter owing to seasonality. Agam Vakil is standing by with what the analysts are pricing in. Agam, Accenture earnings pointed to a gradual recovery in both the BFSI and the US markets. Will some of that be trickling into TCS numbers?
Well, Alex, I'm going to say that this time around is going to be more about the commentary than the performance. As you've already mentioned, that we're expecting a rather subdued quarter when it comes to the performance from not just TCS, but a lot of the other IT companies. But let me start off with the expectations for TCS. So in terms of revenues, we're expecting about a 1.7% up move on a quarter-on-quarter basis. Sequentially, we're expecting margins to expand marginally at around 25.3% as against 25.1%. And consequently, you could see net profit move up around 1.4% at around little over 6,500 crores. Now, in terms of dollar revenues too, we're expecting a 1.1% uptick there. Now, as far as expectations are concerned, as you've said, we have furloughs coming into this quarter, which is why we are looking at a rather subdued quarter. We could see softness because of that, but when it comes to cross-currency impact, well, that will be negligible according to a lot of analysts on the street out there. But we do see strong deal signings for TCS in the third quarter that could translate substantially in the quarters to follow. That said, what are we watching out for? In the last quarter, the management spoke about working and experimenting with clients to identify new and successful business models, and we'll be looking for updates from there. Of course, Accenture is a very big factor there, and we've seen a good quarter, and it's also indicated an improvement in the BFSI and the US markets. So that is something that we will be watching out for. And finally, commentary on client budgets and the changing client trends and how TCS is constantly adapting to it. But on the whole, we're expecting another quiet quarter from TCS.
Right. Thanks, Agam. And of course, Agam will be back when those numbers actually do come out, and we'll be able to decode that commentary, like he said, for you. But let's move on to the other important earnings today. Banks, as we told you in the trade setup, were in focus, and banks will likely continue to be in focus today because IndusInd Bank is expected to post a steady growth in the third quarter. But what's more crucial to watch is the NPA divergence, if any, after the RBI audit. Shraddha Babla joins us with what the analysts are pricing in. Shraddha, what are we expecting with regard to IndusInd?
Well, Alex, as far as IndusInd Bank is concerned, the steady and consistent earnings growth trajectory is definitely expected to continue in this quarter as well. I just want to highlight two things before we move on to the key numbers or the expectations. Now, two things that happened after the bank reported earnings for the second quarter. One is, of course, that the CV cycle or growth has picked up, so that will really drive growth for the company. And secondly, the bank had announced merger with Bharat Financial, so any sort of commentary with respect to the progress on integration is going to be watched. In terms of the key numbers, net interest income is seen growing up about 22.6%. That's a slightly slower growth, but that's on account of a higher base. Net profit is seen growing by about 23% to 927 crores. Margins are expected to remain stable at around 4% levels. Loan growth is seen at about 24 to 25%. Asset quality is not really of a big concern as far as IndusInd Bank is concerned. Last quarter also it had remained, the gross NPA number had remained unchanged at 1.09%, so that's the kind of number we should expect this quarter as well. And like you said, divergence, if any, will be reported by the bank this quarter, but again, this is not of major concern as far as IndusInd Bank is concerned. So broadly, we are going to be watching out for commentary with respect to the Bharat Financial merger. Any divergence in RBI audit is going to be watched out for, as is the continued market share gains in vehicle finance, traction in the non-vehicle finance consumer portfolio, and as far as the CASA ratio is concerned, but no surprises expected here early.
Shraddha, do stay with us. You also have a list of stocks in news that we have to watch out for. You're going to have a busy day today, I'm sure.
Well, yes, Alex. To start off with, we're tracking Maruti, which has announced price hikes of up to 17,000 rupees per unit with effect from 10th January, reflecting higher commodity prices. HDFC board is going to be meeting on 13th January to consider details of QIP and preferential issue. Remember, in December, they had given an approval to raise up to 13,000 crores. It will be interesting to watch that stock. Welspun Enterprises, which has entered into a concession agreement with the Madhya Pradesh government for a project which has been estimated at a cost of about 118 crores. So watch out for that name. Jagatjeet Industries is a smaller company, but ET reports say that they will refinance their 265 crore debt. So this name could actually react on the back of that news. Another ET report talks about Balasore Alloys looking to acquire 70% stake in Zimbabwe Alloy. So keep an eye out on that name. GMR is looking to raise up to 5,000 crores via its airport business IPO, again a ET report. TPG, Bain, Bearing, all of the three PE firms are in talks for Canara Bank's stake in Canfin Homes. Again, an ET report, keep an eye out for that name as well. And also Dredging Corp, which has significantly moved up in the recent times. ET report cites the shipping ministry saying that they have built a case against Dredging Corp disinvestment, so keep an eye out for that name. And lastly, on the back of bulk deals, we're tracking Welspun India, where the promoter has sold 4.8% stake, but DSP BlackRock Mutual Fund bought 3.7% stake yesterday. And lastly, Ujjivan Financial, where CDC Group PLC has sold 1.9% stake in a bulk deal yesterday. So it's a complete exit that they have made. So a lot of stocks to watch out for.
Thanks so much for that, Shraddha. Well, clearly those are the stocks that you have to watch out for. It's going to be a busy day and lots to talk about. Nifty earnings, big regulatory moves. Do stay tuned. A lot more coming up on Bloomberg Quint. Thanks for watching.